All right, what's up, guys? Good morning and happy hump day. It is the 19th of October. Hope you're all doing well. Hope you had a good night last night. If you're a basketball fan, NBA season is finally back, and my Celtics kicking things off with a big W. So that makes for a pretty good morning in my book. But we'll jump in here, guys, and as always, once I get done with my spiel, if you got anything you want to cover, any chart requests, any questions, throw them at me, and I'll be happy to answer them. But we'll get to work here. So the futures are down a bit. Got the S&P futures down 0.7%. You have the Russell 2000 down 1%, and you have the QQQ futures down 0.7. So from my point of view, guys, they got to bounce the market today. They can't bounce the market today. You got the S&Ps taking out 3,700. Kind of puts us in a position where the bulls give back all the progress they've made over the last couple of days. So we'll come back to that in a second. But as far as the pieces of the puzzle that I've been covering with you guys for the last few weeks here, let's run through those real quick. First up the bat is the volatility index. So clearly we're not out of the woods just yet. Structure is still bullish, pumping out the daily squeeze, and we got the daily buy signal. Structure is still bullish for VIX, which of course suggests could see some more downside for the market. Moving on to HYG, the junk bonds. And let's see, the junk bonds, we still got the daily sell signal, and we're going to open up under the key level of 73 bucks. So as long as HYG is under 73, which was your previous support level from back here in the summer, so long as HYG is under 73 with a daily sell signal, remains a problem for the market. And then last but not the least, the dollar. So a couple observations here. Structure is still really bullish. Daily squeeze, you hold that 21 EMA, so structure still holds up here. Notice how the big three indicator is neutral. No daily buy signals, nothing on the 4, nothing on the 2. We're neutral all the way down to the 5-minute. So the structure is bullish, but we're neutral on the indicator for the first time since back here. What this potentially points towards to me, because it's not a suggestion, that the dollar is going to break down and roll over. If we had 5-minute, 15-minute, 30-minute, 1-hour sell signals, it's a little bit different. The dollar going neutral here, to me, kind of suggests potentially it just trades sideways for a bit, potentially in a pretty big range, until we start to see some fresh signals on those lower time frames. So, of course, from here, if we start getting 5-minute, 15-minute, 30-minute buy signals, probability suggests the dollar pops back towards the highs. If instead we're getting some sell signals, 5-minute, 15-minute, 30-minute, that potentially suggests the dollar begins to break down to some extent. But for now, bigger picture, she's still looking pretty bullish. So as far as the pieces of our puzzle, guys, no changes this week. Nothing substantial. Yeah, the dollar's pulled back a little bit. That's cute. It's pretty cute. The volatility index graciously dips towards your 21. And HYG popped a little bit. On a day-to-day basis, like open to close, a pop in your HYG, a dip in your dollar, and a dip in the VIX, that can give your market a pretty good pop. And of course, you move on to the market here, and not too many changes on this side either. So the S&Ps, we'll give them credit where it's due. They barely cranked out a close above that daily 21 EMA yesterday. You give them their kudos for that, but it's not too pretty. We're going to be right back under the 21 EMA this morning. We still have the daily sell signal. And for the love of God, where are our lower time frame buy signals? If we're going to get another August kind of rally, like a rally that lasts for more than like a whopping 48 hours, we should get 5-minute, 30-minute, 1-hour, 2-hour buy signals. Like all those lower time frames should flip to bullish, and that's what's going to trigger that reversal. So check it out. Check it out, guys. Let's anchor to the 15-minute, 30-minute, 1-hour signals. You had all of them back here, and you had a very sustainable rally. Little pop in September fails, and you had a pretty big pop a few weeks ago, but that also failed. So on the hourly chart, did things ever go bullish on those pops? And the answer is no. There was some progress made back above the moving averages, positive moving average cross, but they never went full bullish. Never got the green arrow, which means you're never going into a really strong uptrend. Okay, what about back in September? All right, pretty good pop for sure, but it never flips bullish. So no matter how big the pop is, if we don't end up getting those buy signals, there's a pretty good chance it all fails. Okay, how about the 30-minute chart? Right, you had to have had some buy signals on a 200-point rally, right? Nothing from a few weeks ago. And we bump it back to September. Nothing on the 30-minute. And we could look at the 15, we could look at the 2-hour. The point being, when you're in a downtrend, you're going to get some of the nastiest bounces you're ever going to see. Like that's pretty nutty stuff, guys. 34.90 to 37.50. Feels bullish. It might smell a little bit bullish, but in terms of the structure, we still can't seem to get to that point where things really turn the corner. 5-minute chart in a strong uptrend, 15-minute chart in a strong uptrend. With all the problems the market has right now from the top down, we desperately need those lower time frame buy signals to actually get a pump going. So heading into the open, all we got to show for ourselves here is a sell signal on the daily chart. Quick look here at the QQQ. And the Qs yesterday close under the 21 EMA, no buy signals. Sell signal on the daily and the 4-hour. Quick breeze here through the sectors. Same structure for XLK. Semiconductors still look awful. How about the financial sector? Look, okay. I guess there's something, right? Couple closes back above the 21. You get a 30-minute buy signal. Not too shabby. Not too shabby. But the point being, guys, ignore the financial sector. And I think to some extent, ignore the individual stocks. Focus on the dollar, focus on VIX, focus on HYG, and then just simply play that over-under game on the indices. Are we above or below that 21 EMA? Do we have any lower time frame buy signal? I think with that being the focus, it'll give us a pretty good sense of where she wants to go from here. And of course, we're in the heart of earnings season. Get your popcorn ready for tonight. We got the big Tesla. And last night we had Netflix. Now, big move here for Netflix. It's going to open up at just about $270. So call it a $30 move. Really big move. I don't think it matters. S&Ps aren't green. They don't seem to care too much. The NQ is red. I don't think Netflix earnings matter. What matters is, can they change the structure of the dollar? Can they kill the VIX? Can they improve the HYG? Keep on taking it day by day, guys. But for now, bigger picture, all signs still point towards we want to short the rallies. So short the rallies is what we shall do. But for today's session, so we got a put credit spread here on the S&P futures that we opened up this morning. Little something new for the options room, at least on my end. We've got that, and then in the mastery, we've got a big whopping iron condor that expires on Friday. So along with our swing positions, we're swinging Apple, we're swinging Walmart, we're swinging LNG. In addition to those, we're trying to work a couple of income trades. So for the S&P future put credit spread, let's pull that bad boy up. And it's kind of interesting. Like where we put the short leg. So we have got the... Come on now. All right, let's let Thinkorswim do its thing. The typical pre-market jitters. All right, she's coming back to life. There we go. Performance problem detected. All right, so we did the 3670, 3660 put credit spread. So what's kind of interesting about it, if this trade doesn't work, and I'm not just saying this because I have the trade, but as far as like the structure of the market, if that trade doesn't work, meaning today the S&P futures take out 3670, I think pretty quickly things could get ugly all over again. Breaking 3670, you kind of see the bulls get back all the progress they made this week. So a good perspective is, well, look at the 5-minute chart. So we'll start from the ground up. So the 5-minute chart is starting to break down. You got some sell signals. You got that negative moving average cross. They're giving back some progress on the 5-minute, which isn't too big of a deal. But then you take it to a 15-minute chart, and you see the same breakdown. Under the moving average is negative moving average cross. So the 5 minutes a bit busted. The 15 minutes a bit busted. We take it on to the 30-minute. Now the 30 minutes a little bit busted. So whatever kind of uptrend you had on the 5-minute, 15-minute, 30-minute, at the moment that uptrend is it's breaking down. Okay, what about the 1 hour? It's a little 50-50. We're under both the moving averages. That's not bullish. But we don't quite have that negative cross just yet. So that's a little bit 50-50. In terms of where does the structure still hold, it's the 2-hour chart and the 4-hour chart. So to me, taking out 3670 today, that's a big problem for the market because at that point, you're taking out the 2-hour trend under both the moving averages, and you're taking out potentially the 4-hour trend down there near the 4-hour 50 SMA. So I think in the event that trade goes against me, I mean, pretty much, guys, the bulls are right back to square one, which we've seen time and time again. Trap the shorts. We get this crazy-ass short squeeze. Totally fails. So they're rebuilding the 5-minute, the 15, the 30-minute, the 1 hour. Then they give back all the progress. And then the bulls have desperately got to start from square one. Way down here in the hole, they got to rebuild the 5, rebuild the 15. It's like another renovation project. So I think in a market where there's problems from the top down, and frankly, the bulls are kind of skating on thin ice here, when they make this little bit of progress, it's so important that they keep it. Otherwise, all that bounce really does is just accelerate the next flush to the downside. Trap the shorts, squeeze the shorts, get everybody getting long, then they pull the rug out from underneath you. So here's my suggestion for today, guys. Do this tonight, do this over the weekend. Take a couple of your favorite indicators. Maybe you like the big three. Maybe you like the squeeze, the 10x bars. Whatever your favorite combination of indicators is, what I want you guys to do this weekend is study 3 different moves. I want you to study the rally we had here in August. And what I want you to do is with your favorite set of indicators, look at that rally on every time frame. Okay, what did my 4-hour look like? What was going on in the 15? What was happening on the 2-hour? Take those notes and then compare it to the pop you had here in September, which failed. Then compare it to the pop you had a few weeks ago, which of course failed. What you're trying to do is it's pattern recognition. If I can know, if I can get a general sense of what I should expect from the indicator on a move like that, like if you kind of know the inner workings of that trend, like the back of your hand, it all kind of makes it easier in this current market to not get trapped. Here's a big pop. Does this look anything like it did back here in August? Or does it look a little bit more like it did back here in September? For now, bigger picture, things look a bit more like September. So be cautious today, guys. But we got a couple of iron condors. We got some put credit spreads. And then as far as our swing trades, we continue to be short Apple with the November expiration 150 call credit spread. We are short Walmart, which really is just a total pain in the ass. It's the best way I can put trading Walmart. Not doing anything wrong, like necessarily, not breaking any huge rules, but it's not knocking our socks off either. So we're short for November with some 130 call credit spreads. So kind of at the point where we're trying to see if Walmart can, I mean, either which way, fight itself out of this paper bag. My preference, of course, is we crap the bed and take out the lows. But as far as a risk management, if we actually close above the highs, got to cut that bad boy loose. So it looks like Walmart will open up around 133-ish today. So we're sitting through some chop there, and we've got a bullish trade over here in LNG. And I do continue to think if there's anything worth a shot to the upside, like for a swing trade, something you're going to take to bed, I would think it's the energy sector. The only thing you have out there with good structure. So we like LNG. I think EOG, not too shabby. Of course, you got the big dog ExxonMobil. That looks pretty solid. But that is about it, guys. So those are two things I want y'all to do. Get your favorite set of indicators, study those moves. Study the August rally, and then study these two previous attempts to trigger a rally. Look at that rally on a 5-minute, a 15-minute, all the way up to a 4-hour. I think you're going to learn a lot. So do that this weekend. And the other thing I think you should do probably every day, go through the pieces of the puzzle. Is the VIX above or below that 21? Is HYG above or below 73 bucks? Is the dollar above or below that 21? When these things begin to change, then I think you got to shift in the market direction around the corner. As long as it stays how it is now, keep on shorting those rallies. So before I let you guys go here, we got a couple minutes for some Q&A. The trade that we're trying to get filled on, I'm probably going to try to do this trade in both rooms. I don't think we'll get filled today unless we really rally. What we're trying to get here is the December expiration 4,000 call credit spread. So I'll show you guys that on the chain here. The chain, gang. SPX. I think my order got canceled, so I got to do the order again. Yeah, they canceled me order. But we're looking for the December 16th. 58 days till expiration. Now we need a rally to get filled. So it's not a trade we're going to take today. We didn't even get filled on the rally yesterday. But we are gunning for the 4,000 40-50 call credit spread. That got messed up. Let's try that again. There we go. 4,000 40-50 call credit spread. At the moment, the trade goes for about $10 a credit. Here's a game plan. We're trying to get the first chunk. Trying to get the first chunker at about $15 a credit. So the idea is to try to scale into a December short all the way up to the daily 50 SMA. So I'd like to take a little bit here. I'd like to scale into that trade. Like keep selling those 4,000 calls all the way up to the daily 50. In the event we get to the daily 50, then I kind of take a step back and see how things unfold from there. But if we puke from here, there shall be no getting filled on that trade. So we'll see what's in the store today, guys, but might sound like a funny thing to say. Maybe not a funny thing to say. They have to bounce the market here. Like we're skating on thin ice. We got some sketchy monthly charts with big squeezes. We got weekly squeezes firing short. The market's a little bit too touchy right now for the Bulls to quickly give back all that progress. Like, I don't think we can continue to do this. Huge pop, huge flush, but we hold support. Huge pop, huge flush, but we hold support. We keep screwing around here, or the Bulls keep screwing around here. I think eventually you get a much, much bigger flush. A lot of pressure from the top down that suggests that could be the case. So be patient today, guys. Be disciplined. Be good to your dog. But let me jump to the chats here and see what y'all got for questions. I'll do the... I'll go through the... I'll bang out the questions here in the free room first, and then I'll jump over to the YouTube chat. That'll do it, Andrew. That'll do it. William. Oh, William, you're referring to the SPX, the call credit spread? Yeah, I can post it for you. Actually, just copy and paste it. Give me a second, guys. And then I'll show you the alternative on the SPY in case you have a smaller account. So let's jump over here to the options room. Everyone say good morning. All right, where are my working orders here? Where art thou? Okay, so there's the idea on the SPY. All right, a little bit easier in the event you got a smaller account. Post that trade idea over here in the free room, and I'll also post that in the chat on YouTube. All right, there's the SPY idea. And for a larger account, you could try to spank that puppy with the SPX. Copy, paste. Copy, paste. And if I get filled on that trade, I'll keep you guys posted. We are fishing for now. Fishing for now. Hey, what's up, NoFOMA Bruce? Do I ever intentionally turn on after hours? Good question. Personally, I don't. Now, in the futures, of course, I do. Which to me makes sense. I haven't played around with it. Haven't played around with it yet. In my experience with other indicators, what can happen is if you're working with the after hours on, sometimes it can kind of produce, let's call it like a false signal. You might get a buy signal, you might get a sell signal, where otherwise, if you didn't have the after hours on, it might be neutral, or it might be the opposite. So the argument, of course, would be, well, is that to your benefit or against you? I think the best course of action, if you're interested in that, would be to play around with it for a little bit. Make sure you're taking a lot of notes. Make sure you're keeping track of your trades. Try to get some kind of sample set to the extent where you can get a sense of, hey, I trade better with them on, or I trade better with them off. Me personally, I tend to keep them off. All right, guys, we're doing pretty good on time here. Yeah, Trader Momo, I mean, that's where we are. The list of reasons that would suggest we trade lower, it's a very long list. So we're at the point where they got to fight or it dies. That's my opinion, at least. They got to fight. They got to hold it here. They got to keep a little bit of the progress they made, or all those bigger picture problems, I think they take the wheel. So we're showing up to a gunfight with a squirt gun. The odds are already against the Bulls. So they better work some magic with that squirt gun. Otherwise, they're getting blown down. They're getting blown down. Yeah, Tony, my pleasure, man. Same to you. All right, guys, on YouTube. Good morning, my man G. Yeah, as a Celtics fan, I don't like agreeing with you. Here's what I will say. I would think the Warriors come out of the West. I'll give them that. I'll give them that. Hey, what's up, Jesse Jones? Tesla. So my game plan on Tesla for now, let it get through earnings tonight, and then come back and revisit it tomorrow. kind of see where the dust settles. As far as the structure of Tesla, it's all still pretty rough. It's rough, but you're so far away from that daily 21 EMA. This could rally a good 15, 20 bucks, and the structure would still be generally pretty bearish. So we'll see if that changes tomorrow. And I don't really have any ideas as far as a trade through earnings. That's a bit more up my colleague Danielle Shay's. A little bit more up her alley. Hey, what's up, Jace? Good to see you. Always good to see you. Yeah, Jace, one good example of the earnings pump and dump, you could call it, Goldman Sachs. I actually thought about you a bit yesterday when I thought about shorting this. I didn't take the trade, but yeah, you get a big gap up, runs directly into the falling 50, and down to earth it comes. So as far as Netflix, we'll take a look here. Thinkorswim, we're going to have one of these days, huh? That's how you're feeling today, huh, Thinkorswim? Netflix. So we're going to be where? 266? Yeah. That's a big one, Jace. Jace, here's where it's interesting. I think it's going to make a bigger than expected move. I don't quite remember the expected move, but I think 266, 270 might be a bit bigger than the expected move. If that is the case, there should still be some pretty good premium on the call side. You might look to sell a few to some poor soul out there. My man Alex, what's up, Alex? I love that car on your profile pic. Pepsi if it dips. Okay, I was going to say this has to be earnings, yeah. It does a great job here, Alex, at trying to rebuild the structure. Back above the daily 21, back above the 50. To your point, it's a little bit overbought, but we've canceled out all the sell signals. You've got your 1 hour and your 30-minute going bullish. A lot of signs of progress here. Signs of progress we haven't seen in the market. So the key, of course, is whether or not on that first dip, all that structure continues to hold up. And then I think we want to take consideration to XLP. It's one of those situations where the market still looks sketchy. XLP looks not phenomenal, right? Not great. But Pepsi looks, I think, significantly better than both of them. Better than the market and better than the sector. So all that means is, perfect trade would be a 3-star trade. The stock gets a star for being perfect, the sector gets a star, and the market. If Pepsi holds support on the dip, I would say for now, best case scenario, it's a 1-star trade. Market looks like trash. XLP's mediocre at best. But yeah, Pepsi's kind of got it going on here. So I don't think we have to necessarily avoid the quote-unquote 1-star trades. I think we want to just trade them in a fashion where you're taking all that into consideration. It's not a strong market. It's not a strong sector. So let me trade this a little bit differently than I would if XLP, SPY, QQQ, if they all look picture perfect. Kudos to Pepsi, though. That's a nice move there. That is a nice move. But all right, guys, I think I'm through all the questions here. We do one more peek into the free room. Now, for those of you watching on YouTube, you're going to get the infinity screen here. Head over to simplertrading.com, guys. Sign up for the free room. Sign up for the free room. I'm in there a few times per week. You got this stud right here, Mirza. I think most traders on the roster actually have a couple of sessions in here per week. So check that out, guys, if you want more of my outlook on the market and you want to get access to all the other traders on the team. But that is it for this morning, my friends. I will cut you guys loose here. I got to go heat up the coffee and jump on the mic in the options room in a couple of minutes. So as always, I really appreciate your time. Always enjoyable, and I hope you found it helpful. So have a good day. Be disciplined. Take your dog for a couple of walks, and I'll see you guys soon. Adios, y'all.